stock performance has been pretty good. We're gonna look at their stock, so Arteris IP. If we look at their earnings, this is their accelerating the creation of semiconductor. So they're in the semiconductor industry. Okay, so what do? They are systems staying ahead of electronic systems innovation. All right, so how do they stay ahead? Adoption of new semiconductor technologies, smart system connection, so IOTA products, and supporting silicon-based business creation. So okay, so hardware, software, and then chip level IP. Okay, so those are the systems that they have. So semiconductors can't function without connectivity plus communication. So optimizing on-chip data transport is critical to the performance of power efficiency. Okay, so power is a big thing right now in the AI industry. It's a big topic. So this company seems like they're focused on maybe research or development of these chips that are used for AI by AI companies, maybe AMD, NVIDIA, and so on and so forth. Or maybe they do also innovate new chips for startups that are doing different types of businesses. So they got processors, computing, logic, functionality, memory, capacity, and system IP, network on chips, data movement. Okay, so as they have an IP business is unique and it addresses the market opportunity. Their system IP is different from the function of IP block business. It delivers high levels of automation, flexibility, functionality, and quality. So highly configurable 10K parameters, charges many times during projects and is different from new projects. So all chips move data to be chips. All chips move data to be chips. Business opportunities converting internal system IP to commercial solutions. Interesting. So their system IP, electronic complexity rise, shrinking size and cost. So here is the chip and here is the result. More logic integrated into much more complex system on chip with chiplets. So this chiplet architecture is once again is the AMD way of doing things. Each contains dozens of network on chip to move data. Okay, so what does the company do in this case? So Arteris expanding multi-die solution to meet demand for chiplets. The chiplet architecture appears to be the future where a lot of companies are gonna do business, because when you have chiplet products, it makes it so if one part breaks, the whole system doesn't go under. Rather, it's a partial. So if one part of the chiplet breaks, the rest continue to operate. So Arteris is expanding multi-die solutions. So challenges with the rise of AI, computational power requirements are exceeding what is possible through traditional monolithic die design. So rather than making a single huge die, you make a bunch of small ones. So the solution, Arteris multi-die solution, delivers a foundational technology for rapid chiplet-based innovation across all markets. Okay, so I think there is a lot of business so far from what they're saying. It seems really like a good business here. Collaboration for multi-die physical integration and interoperability. So it looks like they have some partnerships. So Q2, they had some partnership highlights, AMD Renaissance Technologies. So with AMD, the market is being shaped by global need to move increasing volume of data, especially as AI demand parameter may electronic market vertical. Chiplets are being used to deliver computing technology to advanced industry regarding from AI to data center and client devices. So the solution Arteris has is AMD's licensed multiple devices instance of Flex Gen smart network on chip IP to deploy an AMD's AI-powered chiplet across company's broad portfolio, which spans from data centers to edge and devices. Arteris revolutionary FlexGen IP will be used in combination with AMD's Infinity Fabric interconnect underscores the increased complexity of modern system-on-chip and chiplet-based architecture, which now requires multiple highly specialized, interconnected, interoperable network on NOCs. So practically, the companies have solutions, and it looks like Arteris is actually producing those, coming up with those solutions. FlexGen, so this AMD Smart NOPIP momentum since Q1 introduction. So the challenge with the system SoC design complexity has surpassed manual human capabilities, requiring smart NOC automation. Modern SoC have 5 to 20 plus unique node network on chip instances, and each instance can require 5 to 10 iterations. Solution: automated NOC IP generation based on advanced algorithm. Interesting. Incremental features and manual editing capabilities. So this is the benefit is 10x better NOC IP productivity, 30% short wire length, 5% lower overall latency. Wow, pretty interesting business here. Looks like they have some partnerships as well. Arteris business is 50% plus of AI application in 2025. AI everywhere. Well, if you want a company that does the chiplet business around chiplet architecture, and it actually has really good partners here, and especially a company that's specifically really growing in the AI industry. This company seems really interesting. So let's go look. So we'll just quickly go through these, and then we'll get into the numbers. So data center trading, about 5% of the business. Number of customers, five plus customers in this department. They got data center inference 30 plus, edge inference 60 customers. So what is that? 95 customers between all of them. So Arteris customer, 260 AI SoC design wins. Wow. Diversified customer base. So these are the publicly disclosed customers. Obviously, not all of them can be. I'm sure some of them are government. Heisness. They got AMD, Samsung, Renaissance, NIO, the car company, Bosch, Honda, Toshiba, GUC, Canon, Slidos. Well, okay, so they got decent partnership here, all the way from like AI infrastructure to automotive companies, phone companies. They are ISO 91 Continuous Quality Management System certified. So their strategic growth strategy is organic product portfolio expansion, focus on high growth segment and customization, financial performance, and inorganic growth such as acquisitions. So in December 21, the acquisition of Semi4, 2022 they acquired Semi4, 2020 they acquired Maglin. So I am in favor of small companies growing through acquisitions. especially if they're buying companies that significantly align with what they do. Acquisitions are not a bad way to grow. It shows that the company has money and they're able to make good mergers and acquisitions. M&A target every 1 to 2 years. Focus on revenue, cash accretive, profitable opportunities, synergy with existing products line and SOC market. Yeah, that's how you grow the business. Okay. So they want to do more AI, more chiplets, new MCUs, and new products. So they want to spend AIP royalties, AIP licensed revenue. Wow, that's driving most of their licensed revenue, and then they want to obviously grow with mergers and acquisitions. Okay, so I want to look at the financials. AIP, I believe that's their Nasdaq name, AIP. Let's look at AIP. AIP. All right, so how is this company doing? Let's look at their so let's look at their performance. So this company IPO'd about 5 years ago. Looks like they're down 8% at the max. 8% in 5 years. Yep. 1 year they're about 5%, 6% up. Or no, 75% up. Year to date, they're up 34%. Past 6 months, 83% about. Past month, they're down 3%, and past 5 days, they're down about 6%. And the market has been beating up a lot of companies as well. So maybe that's why they've been down for the past 5 days. But let's look at their financials. Revenues. Let's look at their. Let's start with revenues. So December 24th, March 25, June 25. So these are quarterly numbers. Okay. So revenue, net income. So net income is kind of consistently negative here. So revenue 15, 16. So they're not really growing revenue that fast at all. Like quarter over quarter, they're kind of not growing very fast despite the amazing partnerships that they have. Cost of goods sold also consistent. I don't know. Let's look at that here. AIP. I didn't like how that was showing up over the other in Google. So let's look at their earnings. Let's look at their revenue. So revenue annually, this is a company growing revenue. 2021 they were 19, and 22 they were growing at 20, about 33, but like kind of slowing down. I mean, they're sitting at this almost since 2023. They're, barely growing. As you can see here, it's just kind of all over the place. But since 2023, we're seeing some kind of growth here. There's a company back in 22, they were growing at 33%. Cost of goods sold always follows, but their revenue all over the place, while their cost is just continuously climbing. So profit is doing decently well. It is growing. It is growing, which is good to see since they've IPO'd. Despite revenue fluctuating significantly, the company has done a good job on gross profit of continuously increasing. Selling, general administration, this doesn't seem too crazy. Research development, I think this is going to be the company's just major costs most of the time, and then the operations, because those equipments that they have to use for all the research and stuff is going to be very costly. Operating income, yikes, getting worse and worse and worse. I mean, in 2023 it was about $35 million. would like to see this kind of do a better job. So it looks like they're sitting about 30 something billion in operating loss. They haven't hit one profitable year yet. Let's look at it quarterly. In the short term, quarterly looks like their revenues are looking really good though, right? Quarter over quarter. Costs, not too bad at all. Gross profit looks pretty decent here.
Because you should be celebrating. The savings. With Root, you get a car.
Research development is going to be high cost. Operating expense always going to be high. But this company, I mean, they don't hit any operating income. Should small companies really get operating income? No. But I do want to see them make revenue. So revenue's looking good. I want to see them making at least operating profit. So they are. So that's not bad at all. Net income, obviously that's going to be the negative. Something that's also not good is this company, they are issuing less shares. As you can see, they are issuing less shares, but they have been issuing shares since they IPO'd. As you can see, new share count keeps going up, which is diluting shareholders. 2021 didn't have as much, but since December of 2020, Q4 of 21, they've consistently increased their number of shares out there. But the growth, so they're slowing down, right, and the number of shares that they're issuing. Balance sheet looks quarterly, cash equivalents. So short-term assets look, come on. Short-term liability. So short-term asset to liability is not bad. It's almost 1-to-1. Long-term assets to liability. And here, they got a little bit more assets. Barely any. So they do have a significant amount of liability, which is a little scary. For a company that's been around 5 years, they're issuing shares. They're almost operating at capacity when it comes to like asset versus liability. Let's look at it annualized. Annualized numbers, current assets, current liabilities. Annualized, the numbers look much better. Looks like their current asset number, it is growing, but it seems like their seems like their current assets is kind of going down, while their liabilities, is showing some kind of growth here. So not really good to the best sign. We're seeing the current liabilities grow while their current asset numbers kind of go down here. Total liabilities, total assets just kind of chilling at the 107 million, while their liabilities is consistently growing. So I don't like how their balance sheet looks, but the business is interesting. I like in the style of business they operate. I think it's in the AI. AI is going to be a big thing in the future. But would I buy them? No. Are they interesting? Yes. That's it. That's all I wanted to do research on the company and put them away.